All right, so stocks a little change right now in afternoon trading. Mixed earnings, Hewlett-Packard lowered, but JCPenney, believe it or not, up 27%. Overall, the market has been on pause, and some are worried about the Ides of March, some sort of sell-off associated with that. Now, remember, by the way, when Warren Buffett just said last week, we continue, nevertheless, to hope for an elephant-sized acquisition. Well, the stock of the day is Southwest Airlines. It is surging on rumors that Berkshire Hathaway is considering a bid. The stock is responding, trading higher, double the average volume. Now, remember, Warren Buffett, he's got $112 billion burning a hole in his pocket, and this acquisition story is not so far-fetched. In fact, it's in the right industry at the right price, with Southwest currently trading around a $30 billion market cap. Remember, 2015, Warren Buffett buys Precision Cast Parts. They produce parts for airplanes. It was about a market cap. The takeover is around $37 billion. 2010, Burlington Northern, $36 billion, another transportation name. So Southwest, while it doesn't have to sort of moat that Warren Buffett always prefers, we're talking about industry consolidation, leaving the airline with very few competitors. Here with me to discuss it all, Shaffer Asset Management President and CEO Dan Shaffer, CLS Investments President and CEO Rusty Vanneman, and Money Map Press, their chief strategist, Keith Fitz-Gerald. And let me start with you, Keith, since you're remote here. First, let's start with the overall market. Sort of spinning its wheels. We know after this gangbuster start, consolidation was inevitable. But what's the next big move, the direction, up or down?
I think we're going to have a little bit of consolidation, but we've got still a lot of money looking to go higher, Charles, and we've got the right companies making the right moves. So for me, I'm looking sharply higher into the tail end of the year when the fear of missing out starts driving sentiment.
FOMO, what do you think, Rusty?
I'm thinking short term we could have a little pause as well, but I'm pretty bullish going into year end as well.
Why?
Well, I think, first of all, let's talk about the short term. I think the short term, we do have sentiment that's a little extended, a little bullish. We have the market a little ahead of itself as well, so we could have a little bit of a pause. But I think the recession risk is fading. I think the number today kind of helped with that. I think that valuations are so supportive. I think we could still do pretty well this year.
And you're bullish too, right, Dan?
Oh, yeah. Bullish when shorts are going to go up.
Well, you're my favorite bear.
Thank you.
You had a great fourth quarter. But the market is coming back fairly quickly, and it feels like, obviously these are the sort of pauses that you get the big next move from. Why would it be down?
Well, first of all, the market hasn't come back that quickly. It actually is the same amount of time that it went down into the December 24th
but
low.
I'm going from October 3rd, when we peaked. It was the proverbial snowball, and it got faster and faster. Yes. This recovery, the fastest $1 trillion move in a Wilshire 5000 ever.
Yeah, but that doesn't mean anything to me. I look at more of the technicals of what's going on in the broader markets, okay? Not just the...
So people who are in the market, though, why should they be anxious or worried?
Well, I think they should be worried at this point. I think that the market has the capability of dropping as fast as it did before. Those were a lot of redemptions, end of year, people coming out. And people are so excited about all these numbers, the GDP number. That's a terrible number. Why would you get excited about a 2.6 or 2.9 number when, China, if you believe their numbers, is at a 28-year low in their GDP, and you're looking at industrial production possibly slowing down because everybody bought the goods to jump that number up in the fourth quarter because of tariffs. What's going to happen with the ISM manufacturing
one number that didn't get a lot of press today is the Chicago PMI. It came out today. It's a February number. It crushed earnings estimates. It crushed the estimates. New orders up 15 points. Production up almost 9 points. Backlog up 6 points. This is a February number. So this is not this. I mean,
yeah, but Charles, let's go back and look at what the global interest rates are and why I say what I say. We have the German Bund trading at 0.2%.
Right.
We have the 10-year. We have the Japanese 10-year negative. Okay, and you got the United States 10-year now at 271. It's been as low as 260.
And what's the implications of all of this?
The implication is, with interest rates this low, especially on the short end, and so much money claiming to be flooded in by the central banks and governments, why aren't we getting 4%, 5% GDP? It's not happening.
Do you know the last time it happened? 4% GDP? It's been a long time.
Yeah, well, I don't remember.
By the way, here's the thing, Keith. Our GDP number is going up. The rest of the world's GDP numbers are going down. And our interest rates are higher than theirs. I mean, listen, America, whether you think the markets are overbought or not, certainly it's hard to argue we don't have the best economy in the world. And if that's the case, then what does it mean for the stock market?
Well, again, Charles, I think, not to disagree, but to respectfully point out that the growth is real, the momentum is real, and the money doesn't care about the politics, and a lot of the old measures no longer apply. To me, this is a lot of money looking for home in quality companies, and as long as they've got the price protection, the ability to protect margins, there's going to be a split. You're going to see great companies continue to accelerate. You're going to see terrible or shoddy companies fall
Keith,
off
let
the
me
map.
ask you then, what's the catalyst then? Okay, you're feeling really confident about us going higher. We've had this huge move out the gate. We're moving a little bit sideways. That's fine. But what would the catalyst be to take us north from here?
I think there's several catalysts. I think, number one, you get peace breaking out between us and Russia, and I'm not going to place odds on that, but the real one is China. And it doesn't matter whether the agreement is substantive or enforceable or whatever. I think they're telegraphing that there is a deal in the works, and it's imminent. And when that happens, I think that you're going to see the gates open on a magnitude 10, 5, 50. I don't know how many percent it's going to be, but it's going to be a sharp move higher potentially.
I'm going to switch gears a little bit here. Now, I normally don't talk about rumors, but I got to tell you, the Southwest deal sounds like it could be real. And Rusty, I'll ask you this because, the stock is trading huge. The huge volume is up nice. It fits so perfectly with what Warren Buffett said a week ago. He says he wants to make an elephant-sized deal, but he also wants to have a lot of money in case we ever live up to Dan's scenario, right? He wants to be able to buy everything at dirt prices, but he's under pressure, I think, just because of the Kraft situation. Yeah. Could we see that deal come to fruition? And by the way, could we see an uptick in these deals? Because I feel like we haven't had a lot of major takeovers recently.
Well, I would think in terms of Warren Buffett, he's not going to be impatient. So he's going to wait for his deal. So I don't think he's just going to force it to happen just because of the news out there. I mean, I think he's immune to that. So I don't think that necessarily is going to happen with Warren.
But he did say in his letter that he wants to make an elephant-sized deal.
Yep. But he says that all the time. He always wants to do it. I don't think there's a clock when he has to do it.